Good morning, good afternoon, good evening. Welcome to Master Table Match Today 101. I'm here once again to give you a great video. Sorry guys about the quietness for the past few days. I have a lot to do. I had to do some family emergency, and then that's all we're gonna talk about. And now let's go back to the market. As you all know, this week is gonna about an earning report. As I can tell, JP Morgan is gonna be has an earning report tomorrow. It's gonna be July 14, and the reason we see the market is green because people believe the market gonna be it's gonna be good report for Morgan Stanley or JP Morgan. So that's depend which state you're from. And as that's the article, the JPM is expected to post an increase in quarter 2 earning. As you can see, they tell like probably it's gonna be an increase earning. That's you see the market green. As you can see, even though the Federal Reserve 2022 annual stress test indicate stress capital buffer increased by 4% from its current 3.2%, and the bank kept it quarterly dividend $1 per share for quarter 3. So basically that's means a huge thing because that they increase their earning. That's mean instead of losing money, they're earning more money. So basically that's mean that they are green since there's a lot of money from the pandemic that's being released from the company to help those company. So the bank is being bailed out a lot. So basically they say that they keeping the money instead of losing money. So that's why they're raising interest rate. So the people when go buy ask for loan and stuff like that and mortgage, so they increase it, for example, to earn more money. So on the article they say that JP Morgan 2020 net interest income guidance to 56 plus billion dollars from its previous 53 billion. So basically it's going from 3 billion more. So that's a big gap money, because for example if they for example lose that money, that means that the market can be red. So that means they have a lot of money in their hands, 56 billion, that's 3 billion extra. So basically they can do whatever they want in their hands. They even though they freeze a1 from buying from mortgage and stuff like that. So even though that's gonna be bad news for the homeowner and the credit card company, but for them as a bank owner, they have a lot of money in hands just in case everything go down here, so they can bail out themselves and they protect their name. So they're going to go under the bus. High single-digit loan growth, security deployment, and high rate are expected to drive an increase. Like I said, according to the report, like I said, that's why they increase the when you apply for credit card, they increase it from 2% to 3%, and some said they can be for 7 to 10% or 25%. That's depending where you're from, and also if that's for mortgage, and so from the credit card, the credit card 25% to 45%. That's depend also where you are. For example, yeah, like I mentioned, the landscape for investment banking fee has regained challenge, and the quarter 2 investment banking fee is expected to be down by 45 year over year. So basically that's a good thing. So basically from year over year basis, so basically this decrease. So decrease means that they have more leverage to control and they don't have not much what's it called, loss or death. So basically that's what decrease it. So we're gonna see how bad it's gonna get tomorrow, or it's good gonna get tomorrow. But for today, people are optimistic because of that news. Over the last 2 years, JP Morgan has beaten estimated 75% of the time, revenue estimate 88% of the time. So basically that's a good thing. So they keep track on for the past 2 years. So basically we're gonna go over the chart later on to find out what's going on. So for now you can tell that they are having a good year for the past 2 years, and it's being very expected, so to go above expectation. Over the last 3 months, estimate has been 6 upward revision and 2 downward revision. So basically he has a good momentum going up and not going down. As you can see the graph right there, they show it dramatically. I'm gonna zoom in for you to see clearly. So as you can see the quarter earning, there's a Q 2022. As you can see, these are the 3.5, 3.2.5. So basically those are earning. As you can see, these are moving up right there, and it is all moving down. So basically those are the red things, mean they are down. the green thing, that's mean the quarter earning moving up. So they're expecting on 2023 to be earning at 3.5. So basically we're gonna see how bad or good it's gonna get tomorrow. So basically for now, people are optimistic about the JP Morgan. So hopefully you guys do make your decision. But me, I also stay away from earning, because earning is always a problem for people to make money, especially with Ivy Crush. They always apply Ivy Crush on the earning. So basically if you're planning to do earning, so be careful with that. And as you can tell, JP Morgan, the price right now is 112.4, which is a very nice price. As you can see, it's moving nicely. And for now, people are being optimistic. If you go on the let me see, if I go on the daily graph, let's see what it says. Usually for me to buy and sell, I usually look for daily graph. Daily graph is a good opportunity to show which momentum the stock is going, if we're going uptrend or downtrend. And you remember in my indicator, when I told you the indicators to show, for example, the AMA, the stuff like that. So basically the daily show that let me zoom in. The graph for you. As you can see, the graph showed automatically that is kind of, the numbers right there didn't show it properly. So basically if you hold on, let me see if I can slide it down over there. Okay, there we go. This is what I want to see. Okay, as you can see right there, JP Morgan trying to moving up again, so people believing the lowest is gonna be 100, and right now is 112, 113. So basically they expected the market could go even higher. As you can see, the RSI was low, the lowest is 30. So basically remember, the RSI is between 7 to 30. That's the movement. And sometimes the RSI go lower to 20 to 10%, to 10, but right now the RSI is 20, 30. So basically they think it can go even higher. So every earning, that's depend on the day. But after the CPI report, we don't know how high it's gonna get or low it's gonna get. But for now, we're just watching, expecting the CPI not gonna affect really the JP Morgan. But if it doesn't, I think it's gonna be a green market for SP 500 tomorrow, and it's gonna be a green market for tonight as well. As you can tell, SP 500 right now, even though the CPI is bad, but SP 500 is doing very good. As I'm kind of surprised too, because it's not supposed to be like that. But I figured out when there's a bad news, the market go red. When the bad news, the market go green. When the good news, the market go red. So basically SP 500 is moving nicely. So SP 500 is 380, 381. So basically tomorrow, before they're gonna release the JP Morgan earning tomorrow before the market open. So if you hold overnight, I will advise you to hold share, not stock, not option, because if you do, you're gonna have a crush. But if you do share, you're able to balance it out. If you go up, you're gonna earn a couple dollars, but if you go down, you're gonna lose couple dollars instead of having option, which is Ivy Crush, where you're gonna lose a ton of money. And if you like my video, give me a thumbs up, share this on that new, and I'll see you next video. Ciao.